Hello everyone, welcome back to the channel. Right now the portfolio is up $229 and in the after hours I'm down $24. So today it looks like it was a pretty good day. The markets were green. Dow Jones was up. I think it got up all the way to 250 points, and the Nasdaq was up some 83 points, but all in all it was a pretty good day. Looks like the portfolio has spiked up. We're at $17,000 right now. Let's take a look at the week stats. So I'm up $160. In the past month or so, I am up $400, $406. In the past 3 months, I'm up 9%, so almost closer to 10%. So it looks like the portfolio is starting to spike up. It's a lot of good times to be in the market right now, I guess, because the markets keep going up. But we're going to talk about my positions, guys. We're just going to get right to it. So let's begin with VTI, Vanguard Total Stock Market ETF. You guys already know I haven't sold anything. 50 shares, average cost $121. Total return this time was $1,200. So right now it's exactly a 20% gain, which is pretty good. Today looked like it was a very good day for VTI, up $54. I don't know what to say. I mean, this is really exciting time. At least I'm happy I bought low, but Vanguard Total Stock Market ETF, really good ETF that has a really low expense ratio, 0.04% expense ratio. Let's take a look at if it has paid a dividend or not. I don't think it has. So it has not announced. It has not announced yet that it was going to pay a dividend, but I expect them to see how much I'm going to be getting out of VTI. I'm probably going to be getting a lot. I'm thinking closer to $35 or maybe possibly $30, but I'm not sure. $146 a day, pretty good day for VTI. Let's take a look at the next ETF. We're beginning with my high dividend ETFs, the Schwab US Dividend Equity ETF, $52. Looks like today was a pretty good day for the Schwab US Dividend Equity ETF. Total return, I'm up closer to 4%, $99, 50 shares. Average cost is $50. Tons of equity in this one, $2,600. A portfolio diversity of 15%. I was watching this earlier, and I think they did announce their dividend, guys. So let's take a look at how much I'm going to be getting paid from the Schwab US Dividend Equity ETF. So amount per share, 35 cents. I personally thought it would be closer to 40 cents, but that's okay. That's something that I can totally deal with, 35 cents. So total amount will be $17.60 that I will be getting paid on March 25th. So that's going to be a really good spike for the portfolio on that day. And again, guys, I do plan possibly to reinvest the dividends back into the portfolio, probably buy some more stocks of the companies that I like. So the Schwab US Dividend Equity ETF had a pretty good day. Now let's take a look at the Power Shares S&P 500 High Dividend ETF, ticker symbol SPHD. It also had a very good day. Sitting right now at $42.55. My position, I still holding on to my 100 shares. Average cost 38. It's pretty respectable average cost. Total return, some very nice capital appreciation of just over 10%, almost closer to $400. And today's return looks like really good, $59. Pretty good ETF. I like this ETF a lot. I think the dividend yield is closer to around that 4% mark. And let's take a look at the dividends that I'll be getting. So we can already see that the dividends are starting to compound invest a little bit. I got paid on the 29th of February, the 28th of February, $14.26. And now we can see it's doing it again. March 29th, 2019, I'm going to be getting paid another $14.36. So you guys can already see what the dividends are starting to kick in now. SCHD is going to pay me. SPHD is going to pay me. And once VTI posts their dividend, I'm thinking it's going to be closer to $35. So we're looking at closer to about $70, around $60 to $70 worth of dividends appreciation alone. And that's pretty good to see. Very, very exciting time for the high dividend ETFs that keep spiking up. Let's take a look at Apple today. Pretty good day for Apple. They were on an absolute killer tear. I think they got upgraded again by another firm. I know a lot. Apple has been receiving a lot of upgrades, and that's pretty much the reason why this price has just broke out for 15% for the past month. So I think I bought this right on time. The average cost $172. 3 shares. I probably should have bought more shares of Apple, but I'm very comfortable holding these 3 shares for a total return of 13%, so $71. It's been a killer time for Apple. Apple is a very good company. I like their market cap. I like their increasing dividends. It's just really a solid stock. It's really a stock that you can just buy at any time because they're just a fantastic company, and Warren Buffett likes them a lot. So, yeah, pretty good company that I like to put in my portfolio. And let's move on to the next stock here, Disney. So I have made a few changes with the portfolio. I believe in the last video, I may have had Tesla or MasterCard, but I'm starting to look at valuations now just a little bit more so I can just buy some more things on sale and so really just round out the portfolio with some really good buys. Disney did not have a good day. Unexpectedly, did not have a good day since the whole market was up, but we're sitting at $180. Average cost is 109. I am down on this stock, $1.85. So, but I really do think that Disney plays a big part of the portfolio because they do have all those massive assets. I do like the movies that they're starting to do. The movies that are coming up. We know about the Marvel Avengers Endgame movies that's coming up. Lion King's coming up, Aladdin. They're starting to pull all their stuff off at Netflix and, starting a streaming service. So Disney has a pretty good leash on a lot of assets here. And I always looked at them as a company that is really just too big to fail. They have to do something with ESPN. I don't know what they're going to do, but yes, they own ESPN, they own movies. I think they bought all the Fox rights or something like that. So, they own like The Simpsons now, Family Guy, all that stuff. So, pretty good company, but they did not have a good day. They are down 1%, and it's really it's easy to see that Disney has not been having a good month. They're down 3%. And for the past week, they're down 5%. So it looks like there's a lot of profit taking going on with Disney. And it seems like the Bears are in control. But I'm fully confident that Disney is going to be a very, very good long-term buy. So let's talk about the next company that I have in portfolio, Walgreens, $63. I'm holding on to my 10 shares. Average cost $60. Total return $31. Pretty good company. I like Walgreens a lot. Dividend Aristocrat. I went with them because they are a Dividend Aristocrat and they've been increasing their dividend over time. So it was a really good buy. The 52-week low was just at $59, and my average cost is at $60. So Walgreens is a pretty good company. Once again, guys, I still believe that there's still time to buy this company that is still on sale or quite on sale right now, and they continue to go back up to that $70 mark. So pretty good company. It's a great mixture of consumer discretionary retail and healthcare that really just keeps the portfolio focus just in line. So let's take a look at NVIDIA. NVIDIA is another stock that's been really spiking up here. A lot of the equity I have in MasterCard I did put into NVIDIA. Average cost is $170, and the total return is $38. So NVIDIA has been really spiking up here, guys. Right now, the past 3 months, it's up 32%. And it was really a stock that I kept looking at, and I kept saying, man, this stock is still, undervalued. So I'm probably going to just buy some shares, and, this stock has the potential to get back to the $200 52-week high. Actually, the 52-week high is closer to $300, but this stock is really it has impressed me. It was a stock that I really wanted to buy when it got on sale because I do believe in like artificial intelligence and is a good chip maker. I know there's a lot of people like AMD. I think Micron Technology might be in the mix there. Texas Instruments, but NVIDIA is the one I'm going to go with. I still think it's a good buy. It's not becoming a good buy because now the stock is shot up so much, but I think under $200, definitely you can still get in below that $200 mark and possibly see some gains here. So NVIDIA, good company. I put them in the portfolio. Really like them a lot. So last company is Store Capital. Today, $33. My average cost, this is a company I just recently bought. 25 shares, average cost $32. I'm up $8. 1% gain on this company. Store Capital, really interesting stock. The reason I know, so a lot of people have the the impression that Warren Buffett personally bought this company. That is not true. Warren Buffett did not purchase Store Capital. I believe that one of his portfolio managers actually purchased the company when it was really on sale. I think they purchased around $21 or so. But Warren Buffett himself did not buy this company. It was one of his portfolio managers or one of his people that he associates with that manages Berkshire bought Store Capital, and they have a really good portfolio, a lot of good assets in that portfolio. I think they own like Applebee's or something like that, or properties of Applebee's, but. The reason why I bought them is because they do have an ex-dividend day coming up, and it's just a really solid real estate investment trust. I've been looking at their earnings reports, really solid. They've been knocking the ball out of the park. A lot of people were saying that this stock is a little bit overvalued, but I think that it has plenty of room to grow, guys. This stock really, I remember buying this stock like around $28 or so, and it really has impressed me as far as see, there it is. So I did sell market sale July 9th, 2018. 20 shares at $27. So you look at the price now, price is $33. So this company definitely continues to grow. It continues to impress me, and I threw some money in. I want to see where this is going to go as far as that dividend is concerned. The dividend, it was closer, at least when I bought it, it was closer to 4%. So the ex-dividend day is coming up. The dividend was closer to 4%, and the company is doing very well. So those are the things that an investor likes to see, and I put some money into Store Capital. I definitely think that they can be a really good holding, a good long-term holding. I'm going to try to buy maybe about 50 shares of this, guys, and really compound that dividend. But I'm not going to buy, as long as the dividend yield is above 4%, I think that's when I'll probably buy some more shares. But we'll see. We'll see what happens with Store Capital. I do think it's a really solid real estate investment trust. And guys, that's going to do it with my portfolio. Right now, we're at $17,000. The portfolio itself, I really like where it's going. There's a lot of good assets in here. I put some regular companies back in. I think Disney's going to be a good play here down the road. I think Walgreens is really spiking up. I got a steal with that Walgreens by $60 and 10 shares. NVIDIA is starting to go back up. I think 50 shares of Store Capital and compounding that dividend over time along with SCHD is going to be really helpful to keep the portfolio in check. I don't know, guys. Let me know what you guys think in the comments. The way it's looking, this is definitely a long-term portfolio, and a portfolio that can really, I can just coast along and won't have to really sell anything because I have so much shares of my high dividend ETFs that pay a lot of money. They pay very, very high dividends. And SPHD, again, guys, pays monthly. So I'm getting a monthly dividend with SPHD on top of whatever I'm going to get from, Walgreens, Store Capital, the M1 Finance portfolios. And I'm thinking about possibly adding ticker symbol O. I know, right? But right now, the problem with ticker symbol O is that it's really expensive. It has not gone down, so I'm really waiting for a dip with this company. But another company that I am interested in adding to the portfolio, really just a compound with SPHD in terms of a monthly dividend stock, is Main Street Capital. So Main Street Capital, I think, is still a pretty good buy, with a dividend yield sitting closer to almost closer to 7%, which is maybe look a little bit unstable, but you have to remember they recently increased their dividend. So their dividend, I think right now is at 20 cents, and the valuation is much, much cheaper than ticker symbol O, Reality Income. So I think Main Street Capital is going to be my next play here. We're maybe talking about probably about 25 shares of Main Street Capital, and then I'm probably going to add another 50 shares to Store Capital. So that's probably going to be it for my portfolio. But that is going to be it for my portfolio. Again, $17,157. Portfolio spiking up. I do expect probably by the end of the year that this will be over $20,000. But again, let me know what you guys think, and I'll see you guys next time.